So who pays for a home appraisal? Well, hey friends, if you're buying or refinancing a home, you've probably heard about home appraisals, but a big question that we get all the time is who actually pays for the home appraisal? So if you've watched any of our other films, you know we're gonna get you a specific answer to the question that you asked, but trust me, I think you're gonna wanna stick around for answers to a few other questions that likely might be top of mind for you, or maybe you haven't even thought of them yet. Hey guys, my name is Gavin Sessions with Loans Made Simple. If you are curious to learn about all things related to mortgages and home loans, subscribe to our channel. We post new content each week. If you're ready to get qualified to purchase a home, or you're looking to get connected to a great real estate agent, our contact information is in the description below. So as promised, here's the quick answer to your initial question, who actually pays for the appraisal? So long story short, and drum roll please, it's most typically paid for by the buyer. So if you're the buyer, you're probably gonna pay for that appraisal. All right, so in most cases, the buyer will be responsible for the appraisal fee, especially when you're obtaining a mortgage to purchase the home. And before you ask it, big smiley face here, yes, an appraisal is part of your closing costs when buying a home with a mortgage. And if you're wondering what closing costs are, this is not the video to get into closing costs specifically. So like we've done in the past, we suggest you find our closing costs video, which we'll give you a link to right here. Watch that video and then reach out with questions. So the cost for an appraisal typically ranges between $500 and $700, so pretty modest, honestly, if you're just gonna buy a single family home. But that cost can go up depending on the complexity and the uniqueness of the property, right? So if the home is larger or remote, or if it's multi-unit, expect to pay more on your appraisal. And you might be asking, Kate, can I shop around and find a better price for my appraisal? Well, the answer is no, you cannot shop for an appraisal. So there are certain things you can shop for, certain closing costs like your title fees that you are able to shop for as a home buyer or as a consumer, but the appraisal is not one of those. So the lender is gonna have relationships with certain appraisal management companies or a panel of appraisers that they direct their appraisals to. So the lender can't even choose specifically who the appraiser is because the appraiser needs to be a neutral third party. So as a consumer, you don't get the choice of shopping for a different appraiser. And even if you did, it'd be unlikely that you would find a cheaper price for the appraisal, right? So appraisal fees are going to be generally consistent across all the appraisers in a local market. All right, so we've already said that a buyer most typically will be paying for the appraisal in a purchase transaction, right? But occasionally in a buyer-friendly market, and buyer-friendly, you might be like, what does that mean? It's a market where there are likely more homes on the market than there are buyers, right? So in other words, homes may sit on the market longer, and that might encourage sellers to be a little bit more aggressive in their negotiations, right? So you may be able to negotiate with the seller in your offer to have them pay for the appraisal. Or better yet, you might actually be able to negotiate some seller credits from the seller, right? And those credits can be used to help cover your closing costs and your prepaid items. Again, not the video here to get into super specific details on closing costs, but they are a thing, and seller credits can help to cover those closing costs, of which the appraisal is part of that. So hopefully that makes sense. All right, so we just quickly mentioned a term that you may not have heard of before, seller credits or concessions, right? So if you're curious to learn more about that, scroll down, reach out to us. We'll love to have a conversation with you and explain that further in detail. All right, so maybe you're watching this video and you're not even in the market to buy a home, but rather you're looking to refinance your house. So yes, this section is specifically for you. So if you're planning to refinance, you will pay for the cost of the appraisal as part of your closing costs. There we go, closing costs again. But typically most borrowers are gonna choose to add their closing costs to their loan amount, pending there's enough value in the subject property. In other words, that the home appraises for enough, and that prevents you from having to bring those closing costs in cash to the closing table. So hopefully that makes sense. So moving right along, now that we've answered the initial question of who pays for the appraisal, some of you might be asking yourself, what is an appraisal? Well, great question. Let's get into that really quickly. So an appraisal is a third-party licensed appraiser's opinion of the value of a property, right? And that's gonna be based on comparable homes in the immediate vicinity, usually within a mile if possible. And those homes are gonna have similar size, condition, age, and feature set, right? So in other words, a single family home doesn't compare well with a duplex. Or a home that's in a neighborhood, maybe on a 1/4 acre lot, is not gonna compare well with a home that's sitting on 5 acres. So that appraiser's job is to visit the property, take photos, and then compare it to the most appropriate homes in the immediate vicinity to help determine what the value is. So another question you might be asking now is, why is an appraisal important? Well, number one, it protects you as the buyer from overpaying for the property, right? Let's say you're looking to buy a home at $500,000, maybe the appraisal might come in at $490,000. We'll get into that further below, but the appraisal is going to protect you from overpaying for that property. And number two, the appraisal is going to protect the lender from loaning more on that property than the home is worth, right? So if the homeowner ever owes more on the property than what it's worth, that occasionally can happen. That homeowner is underwater. And when somebody's underwater on a home, they're much more likely to default. So a lender never wants the borrower to be underwater, and the homeowner never wants to be underwater. So hopefully that makes sense. Hey guys, it's Gavin here. I just wanted to take a quick minute. If you're ready to take the next step on purchasing or refinancing, click the link below, fill out our form, and we'll get you quickly connected to our qualification team. All right, so now that we've covered who pays for the appraisal and what an appraisal is, let's quickly review how the appraisal process works. So the first step is the appraisal is ordered by the lender. And for a purchase, this happens after the buyer has waived their inspection contingency. So let's just quickly talk about contingencies, right? So when you make an offer on a home, it's typically going to be contingent on three things. The first is the inspection, the second is the appraised value, and the third is going to be an underwriting contingency. So at three different stages, you're going to be asked to release or waive those contingencies, right? So why this is important is the appraisal is the first loan cost that's incurred by the buyer, and we want to avoid incurring that cost for you as the home buyer if you decide to back out during the inspection contingency period. So you hire an inspector to go inspect the property to help you understand, basically to flip up the hood of the house, right? And give you a really thorough report on the condition of the home and basically all the nooks and crannies and get you completely up to speed on what you're buying, right? If for some reason during that process, the home is not satisfactory to you and it's not able to be corrected by the seller prior to closing, you can back out of that transaction, right? And then you're actually going to be refunded your earnest money. So we want you to feel great about the condition of the home before we go incur the costs for an appraisal. So hopefully that makes sense. All right, so step two is the appraiser is very simply going to visit the property, take a bunch of pictures, take a bunch of notes, and then they're going to go back to their office. And then step three, the appraiser is going to provide the report, right? So the final report is going to include the appraiser's opinion of the value, and that's going to be based on at least three comparable homes. So when you get your appraisal report, and I think we actually have a video that details this a little further, you're going to see the subject property on the left and then at least three comparables to the right. And it's going to be the best possible comparables that the appraiser is able to find in the immediate vicinity. All right, so step four is getting that appraisal fee paid for, right? So if the buyer is paying for the appraisal, it's equally typical for the lender to either request payment up front for that appraisal, or again, equally typical that they'll allow the buyer to pay for that at closing. It really just depends on the lender that you're working with and their standard process. All right, so one thing I just want to quickly note for you, for riskier cash out refi transactions, it's not uncommon for the lender to request payment up front for that appraisal, as the borrower or you might be reaching for an unrealistic value. So if and when that value comes in low, the deal could fall apart and the lender doesn't want to be left paying for an appraisal for a deal that falls apart. So along those same lines, if the transaction does fall apart and it's after the appraisal report has been completed, most lenders are still going to request that you as the buyer pay for that appraisal, as the appraiser is a third party, right, that did complete work and they still need to be paid for that completed work. So again, hopefully that makes sense. All right, so let's answer a burning question that you're probably thinking about. What happens if the appraisal comes in too low? Well, that can be a problem or it could be an opportunity. It really kind of just depends how you want to think about it. So if the home appraises for less than the purchase price or less than the expected value on a refi, right? So when you have a conversation with a loan officer and you're doing a refi, you guys are going to come to an agreed upon estimated value, right? That is the target. So if the appraised value on a refi comes in less than that target, you've got a few options, right? So the first option is we would suggest you work with your realtor to help provide alternative comps to the appraisal to either rebut or request a reconsideration of value. So if you don't have a great real estate agent, or maybe this is a refi transaction for you and you don't have a relationship with a realtor, we would love to help. Scroll down, leave us a comment, or reach out to us and we will help you get connected to an awesome real estate agent in your local market. So another option, if it's a purchase, is you can attempt to renegotiate with the seller to lower the price, right? So for example, $500,000 purchase price, you offered the seller $500,000. The appraisal comes in at $490,000. That would give you an opportunity to go back to the negotiation table with the seller and ask them to reduce the price to $490,000. They may or may not say yes, right? If they say yes, great, congratulations to you. You just saved $10,000 off your purchase price. If they say no, you've got the option to back out, right? Or you've got the option, if you wanted to pay that difference out of pocket. But that's if you're able, right? You may not have the funds available, but if you did, you could choose to do that. But pro tip here, just again, for you to be aware of, If you choose to pay that out of pocket because you love that home, you may or may not be putting yourself potentially underwater, right? Because you might owe more on that home than what it's worth. So we mentioned walking away, and if you choose to do that, similar to the inspection contingency, you can walk away and leverage your appraisal contingency to get a refund of your earnest money. And that would be in the case where the appraisal came in low and the seller and you could not renegotiate a better price. You couldn't rebut or get a reconsideration of value from the appraiser, and just long story short, the deal falls apart. So in most cases, the buyer will pay for the appraisal, but as discussed, there are exceptions to that, and understanding the process is going to be super helpful to getting you prepared for buying or refinancing a home. If you're feeling curious to learn more about all things related to mortgages, we suggest you watch this video next.